What's going on, everybody? It's Armor Bull Trading, aka the Fish Hook Trader. So I want to talk briefly about a couple of things. I got the live chart right now. It is September 18th. It is a Friday. Market is about to close. It has been washy all day long. So one of the things that we're going to look at is credit spreads versus debit spreads. As you see on the board here behind me, but real quick. This is sort of a secret apparently because nobody really talks about or uses this index as far as SPY, everyone uses it. But it's called DIA, which is essentially the Dow Jones Mini, right? What I've discovered is that it's a lot less volatile than SPY. And the premiums and deltas versus theta is just as good for right there at the money. Now granted, the Dow doesn't move nowhere near like SPY does as far as, the range. So SPY normally has like a $5 or $6 range. The Dow kind of does, but the DIA matches a little better. So right around here, just earlier, I picked up a 270 put, and I turned around and sold it here. It was just a couple dollar move. I went ahead and scalped like 60 bucks on that in like 20 minutes. Then I turned around and waited for this confirmation to bounce off 274, 275 range, which is this huge red line you see coming across here. That is a major support. And it's about 2:20 p.m. on the East Coast here, and we're getting some nice steady up, going across here. I could draw some trend lines, but my internet out here, though it works, is very slow. I guess because the garage is so far from the router. I even got a Wi-Fi extender on here. Anyway, so I actually custom made this whole chart setup in Fidelity Active Trader Pro. It was kind of a mix of a lot of things I've learned over time. This huge, massive green bar area here is not volume candles. I noticed that the camera's focusing in and out. Hopefully it doesn't interfere too much with the video. As you can see, we got a pretty decent sized bullish candle here going. This is the 3-minute chart, so it will look a lot like it's making huge moves. One thing I recommend for a lot of you traders, especially new folks, even if most people say intraday trading on the 5-minute, even the 1-minute, or even a 10 or 15-minute candles, you can actually fake yourself out because you're going to be looking at huge candles, but they're not really that big. And so like these candles look massive, but in reality, it's like 45, 50 cents movement here. But now we are establishing support, or attempting to. This big, huge red line here is indeed the 50 EMA. Now, if we reject that, I will go ahead and sell my position that I actually have currently, either cut loss or just sell it all together. See what it looks like. So far it's up 20 bucks here. That is the DIA 280 call that I said I picked up at, I picked it right up when it bounced off 274. So all in all, this was a lot more valuable earlier today before the market came crashing down a little bit. It was worth around 580, probably 600 at open, 575 range, and I picked it up right around here. I went ahead and paid $425 for it just to cut it because I couldn't get in quite below that. I tried to do it for 400, but it wouldn't work. So currently, I have a limit sell for 500 bucks just to get out, quickly and take another little profit there. I did lose some money on my SPY debit spreads, call debit spreads for October 2nd. I'm gonna be busy for the next 2 weeks, so I'm just looking to scalp quick money. Up 86 bucks on the day on this. This was $200 last week. Went ahead and started basically a $200 challenge. I am shorting Tesla. I don't know if you guys can actually see this. Shorting Tesla for October 16th. I know battery days next week. So it should actually lift up, but in the interim between now and Monday, it's a possibility we could see a nice drop again on Tesla. If we don't, the debit spread wasn't very expensive. It was only 165 bucks. Got after that, it's ranged between +5 to -10. GME call, this is pure speculation because of a big order that came through. Somebody bought, I think, 3,000 $14 calls at like 12 cents each. So this was only 35 bucks. That person's probably long gone out of position now, but we'll see what happens with that. But I'm looking, like I said, to close out DIA if it rejects this this range here. on the 50, which is at this marker 276.64. So we got a whole nother 50 cents or so to go before it rejects. If it breaks over that, we could have a nice day back up to about 277 maybe. I think 278 is my VMA. Now, it's not just these naked indicators. They are actually built into what you see here, and it is all based on the Bollinger Bands. Now, if I mentor you, if you sign up for that, it's $300 a month. I'm not going to be opening any spots until probably mid-October. But once we do, I'll show you how to build this infidelity. I do not use TD Ameritrade or Thinkorswim. I just don't care for it. It is what it is. Anyway, so I would like to talk about what we're going to talk about now. Credit spreads versus debit spreads. So this seems to be a very confusing topic for a lot of people. Credit spreads. What is a credit spread? You actually receive a credit, but you do not get the credit until it is realized through the move. So say I bought a credit spread, or sold rather, and I received a credit. Say I sold it for, let's go from here to here. So let's go 276 to 278. So that would be a put credit spread, which is a bullish position. All right, now say I did it for that $2 move. Say I was credited because it's at the money, it's not really out of the money. So say I was credited, it's a $200 move, or $2 move rather on the options premium. So it's gonna cost the spread width $200. So say right now, I got a $15 or $20 credit. We'll use $20. So that means I'm gonna put up $180 collateral cash to make $20, right? That doesn't sound very enticing to most people. So they'll just buy a naked call going to 278. And as cheap as these premiums are on this, it actually makes sense. But if you go with something like Tesla, where they're $3,000 and $5,000 at the money contracts, you're not really going to want to do that unless you just have that big of an account. Now, for small accounts, especially under $1,000, you're going to want to look at credit spreads or debit spreads. If you expect this move to occur on something like Tesla, you can buy a debit spread, which is still probably going to cost you a few $100s. But if you're doing it on something like DIA or even SPY, it's not going to cost you quite so much money. And again, credit spreads, you're receiving a credit. All right, you're not, see, we're trying to establish support here. This is the 21 EMA moving average, the blue line here. So if it breaks back below that, we could retest 274 again. I'm gonna hold my position probably till the end of the day. It is the weekend. I would hate for it to hold that position that costs $400 and then turn around, or $425, and then turn around and gap down. You know, that would be stupid. I wouldn't mind scalping $20. That's not a problem at all. But it looks like we're building support. Anyway, credit spread. You're receiving a credit. All right. So a position I did last week was I went 3 credit spreads for January 2021, which was on Tesla for 780 and 800. Right. Bull put spread is the correct term that we're going to use, and it moved a couple $100 on each contract. I had 3 of them, and I went ahead and bought them all back for a lesser value than what I was credited. Therefore, I took the profit in between. So it was, I believe, 150 collateral, so it was 1950 credit each, $2,000 spread width, 780 to 800, and it was 150 collateral, and then the difference in that up to $420. That's what I took profit. So to 300 and 4, so 5, so whatever, 150 from 420. Anyway, nice little couple $100 profit, and I only held that for 5 days. And as far as watching SPY here, the SPY is ticking down. I actually just saw it dropping a little bit. Now, it's funny that DIA is moving up versus down, but you know what? Let's go ahead and let's possibly get out of this position. We don't want to lose any money. It's not necessary, right? Let's go and pop in here. Shows that I got 1 contract. So as you can see, my cost expiration is 10/16. I have plenty of time, but 284 is the big break-even price, and I don't see that happening at the moment. Again, 425. So I do have this sell right here placed. We're going to go ahead and cancel this. Oh no, I haven't set it yet. Excellent. Okay. We're gonna go ahead and do this here. We're gonna get one, and we're gonna sell it at 450 if we can. Let's see if it'll take it. And this is live trading. Oh wait, wow. Oh no, I want to sell it. Ha! Sell it close. Sorry. Make sure you're on the right thing. I guess I do have it sold. Hold on one second. Let me find my order over here. There it is. I clicked the wrong one. All right, cancel order. So I had a limit sell for 500. Looks like it's not gonna hit that area today. And that's all right. Let me confirm the chart. Yeah, so it looks like we're pushing back under a little bit. I don't mind taking 20 bucks. Remember, we bought in for 425. Let's try to get out right now at 450. All right, let's see what happened. Not yet. Let's go back to the home page, see where we're at. Maybe I need to change the date. Let's see. So 18 current value is 443. You know, it's only $7 difference. But the thing is, if we think the market's about to pull back down, we don't want to be sitting on a position that's worth $400 something and then turn around and lose half of that money, you know, just for something stupid, right? So contract available to sell. They sell to close. All right, let's see. Let's go ahead and get a 440 limit in here. They cancel. What's it tell me? All right. So notice I went $3 under, and there it goes. It filled right there. So went at 425, sold at 440. Quick little profit, nothing crazy. But I'm not going to sit on the market when it's a Friday. I've got stuff to do over the weekend. I'm not going to be watching this. So currently on the $200 account, we're up about $60, $80 today. This Tesla one, debit spreads move a lot. So you got to be careful with that sometimes. But let's check back on the charts and see what happened. All right, so maybe I did a false breakout. It looked like it was going to push back down, but it turned around and went back up. Now, between the Dow versus the SPY, SPY came back up a little at 330. SPY may break that back down a lot more. 328 is my next support area, but it looks pretty good. So we're going to leave it. Let's check out. Matter of fact, let's check out Tesla while we got it here. Go here. I love the Fidelity Active Trader platform. It's one of my favorite. So it's a 3-minute chart. Obviously that looks wild. Let's go here for just one day. That's a lot better to look at, right? So we're gonna go over here to the lowest candle point and drag that down. So now Tesla looks like it's attempting to go bullish. Again, this is a 3-minute chart, so we're at 441. I'm gonna hold what I got, you know, and now here's what you learn. If I mentor you and you create what I made based on many different indicators all built together. So essentially, as you can see here, this huge gap up, it immediately retracted back to the center, right? The 50 is always your support for the most part, and when it breaks below, once you saw that green candle break and reject under the 50, you already know that you have a high probability of going down. That's a pretty good place to take a position. Again, it's a 3-minute chart. These candle bars are huge. Now with Tesla, they might actually be $2 or $3 per candle because it's such a large moving stock, right? Now, you see all these lines. Now, my indication for me getting in or out of a position is oftentimes the bars. So when the bars step into a certain range, when they step out into this black zone, which is no man's land, right? That is when I am more likely to either close a position, take profit on a position, or maybe even enter a position if I'm going the opposite direction of what you see on the bars. So I do believe Tesla is gonna have a good day next week, but right now to Monday, it's 50-50. Now what this will do for market movers or market makers even to take a lot of extra profit in between these premiums, taking all that slippage, is when the market dumps, if Tesla follows like it did this morning down to like 420s or something like that, you can actually get in a really good position, especially if it plans to run next week. I was really expecting $500 a lot sooner. We tapped 460 yesterday, I believe it was, which was perfectly in line with what I was looking for. But it appears that it will test the VMA right now, so we'll see what happens there. Now, back to the purpose of the video. Debit spreads. I quickly explain credit spreads. Now I want to talk briefly about the debit spread. And real quick, if you can see my chart, I don't know if you can zoom in on your computer or whatever, but all these are all red all the way across. Majority of these stocks here are tech stocks. PayPal, Qualcomm, Apple, Roku, SPY is still sitting at 330. Flip back, AMD, American Express, Bank of America, Delta Airlines, whole lot of down, and you got the New York Stock Exchange showing a huge sell area there for problems. Qualcomm, GoPro, all these. Anyway, debit spreads. So with the debit spread, what you're going to look for, and the example I have on Tesla is actually very good because we can look at the chart. It sort of looks like it's going bullish, but it is getting to a range to where we want to watch out, right? Now, I don't plan on growing this account to like some ridiculous number. I know a lot of people gamble options and they turn $1,000 into $50,000 in some miraculous time frame, which is amazing, but that's probably the worst thing that can happen to somebody who wants to actually trade long term. So what we're looking for here, let me get off the screen, is this Tesla put debit spread, right? So the actual put debit spread in itself is fine, but you have a huge bid ask, 125 to 180, right? And it'll fluctuate even more than that. This big spike right here, you can expect that not to actually occur unless the price really takes a sharp dip. Even at market open, it wasn't even that volatile. It stayed right in the 150 to 148 range. And the good news is the expiration on this is October 16th, right? So we have October 16th expiration, all right? The break-even price is 413. My average cost is 162. Current market value 155, 153, 150. All right, so 7%. I'm not going to cut losses on this, and the reason you don't really want to use a stop loss on a debit spread or credit spread for that matter is because unless your brokerage is really tight on that, it's not going to work out in your favor. You're going to get killed on the slippage for the market makers because they're going to eat you alive, like 125 to 185. I mean, all that thing has to do is slip for a moment, it hits your stop loss, and then boom, now you're out of the position for no reason. The stock might not even went anywhere, but the premiums are moving so much that it caused you to get hit on your stop limit because it's taking the difference between the two, right? So we have one spread available. I should probably put this on dark mode so you can actually see, but I'm not gonna expose my account right now. Anyway, debit spreads. So like I've explained in my past debit spread videos, is that we can actually take, and I'm pushed for time here, I gotta go in just a moment, but debit spreads, we can actually take a long position against the stock where we think a move is gonna come up or drop significantly, just like as you see my Tesla for 415 and 412, that's a $300 spread width, right? I'm telling you the trick to debit spread right now. So 415 to 412, all right? 415, 412, all right? Anybody do the math on that for me? 3, all right? So 100 shares times 3 contracts, you're looking at a $300 spread, okay? My cost, 162, okay? All right, I'm terrible at math right now because all these other reasons. Come here, girl. All right, so just to be brief, I'm sure a lot of you can do this in your head, but my brain is not working right now that great. So 300, 162. All right, 138, there you go. So your max realizable profit is $138 on the spread. Now the only way to actually receive that entire amount is for Tesla actually by October 16th get down around this 412 or below. 412.50, 411, whatever. You'll realize 99% of this profit. Okay. Now, am I expecting to make $138 on this spread? No. I'm expecting to make $60 on this spread. All right. Yes, that is half. Oh man, you just turned me off. I could buy a 412 put. Okay, you go buy you a 412 put because that's going to run you. Let's go ahead and see if we can pull that up real quick. Click on Tesla. Let's just see how much a put is for October 16. October 16. You want to buy a put. There we go. $4,430 for one put. So that is why we have the debit spread, because it takes the 415. All right, I don't know if you can see the screen very well, but it shows +1 here. That's the one we bought. We bought the 415, we're long, and we sold the 412. That means we think it's going to be somewhere in this range or drop enough in order for this to create a profit, in which we will close the position. The same principle goes for credit spreads, except for you're receiving a credit that you must gain the value of in order to take it back. So to me, I'm not looking to actually receive credit spreads week to week. I would rather sell puts on those, because if I think Delta Airlines is going to stay above $30, I'm going to sell a $25 or $28 put for 2 weeks out, and I'm going to collect $50 to $100 every 2 weeks. Granted, that's going to cost you some collateral. You have a $25 put, that's $2,500 collateral per contract. So with that being said, that'll be all for today. I'm going to go ahead and make another video soon, more likely a couple weeks out from now. I hope this helps you understand a little bit. Thanks guys for watching. And again, Harbor Bull Trading, we're here.